Good morning, traders. This is Joanne with Succeed in Forex. Welcome to our Forex news broadcast for Monday, April the 14th, 2008. I apologize that again on Friday we had some technical problems. Program crashed again, so I've changed computers, hoping that we can get the program to work on this computer. Right now, it's not looking too good, but we will try to do the best we can to try to get this out today. Looking at the headlines this morning from Switzerland, they read, G7 reported concerns about sharp fluctuations in major currencies. The yen rose broadly on Friday after a fall in quarterly earnings for General Electric stoked fears about the health of the U.S. economy, causing investors to close riskier assets. U.S. stock markets fell more than 2% on Friday, dragging the dollar lower against the low-yielding Japanese yen and Swiss franc. Analysts said the news that General Electric reported a 6% drop in profits, along with data showing U.S. consumer morale plunged to a 26-year low in April, weakened expectations on the U.S. economic strength and wealth. The dollar-yen dropped to a session low of 165 and was last traded at 195. The euro-yen fell to 159.61, reversing from an intraday high of 161.36. The euro-dollar was up at 158.12 after having hit a session high of 158.55, not far from a record high of 159.13 hit on Thursday. The pound dollar is trading at 198.57, up from 197.05. The dollar Swissy has dropped to 100.11. The yen also rallied against the Kiwi and the Aussie as concerns about the U.S. economy encouraged investors to unwind carry trades, which are funded by borrowing in low-yielding currencies such as the yen and investing in currencies and assets offering higher returns. The G7 finance ministers and central bankers on Friday said they were concerned about sharp fluctuations in major currencies since their February meeting. The G7 comment implied that authorities could step into dollar intervention, but traders and analysts doubt that that would be done anytime soon. Besides the Forex market reaction to the G7, traders said the dollar direction could be influenced by this week's U.S. data, including retail sales, producer price and consumer prices, as well as U.S. banks' earnings. The Federal Reserve is widely expected to lower interest rates from the current 2.25% later in April. In contrast, investors expect the ECB to keep rates at 4% for a while. The communique of the G7 finance ministers and central bank governors is slightly stronger than previous statements. The first statement regarding currencies, expressing the biggest change by the G7, regarded the unwarranted currency move. The statement underlined that, and I quote, "Since our last meeting, there have been at times sharp fluctuations in major currencies, and we are concerned about their possible implications for economic and financial stability. We continue to monitor exchange markets closely and cooperate as appropriate," unquote. The phrases "cooperate as appropriate" is a direct reference to joint intervention and will keep traders on their toes. Interestingly, this strong language has been used during previous periods of intervention. The lack of clear focus on the dollar indicates an emphasis on volatility rather than specific levels. The second statement was on the gloomy outlook of the financial markets and downside risk to global growth. Finally, while the section covering China was identical to the prior statement, it's worth reviewing. As it stands, it reads as follows, quote, "We welcome China's decision to increase the flexibility of its currencies, but in view of its rising current account surplus and domestic inflation, we encourage accelerated appreciation of its effective exchange rate," unquote. After making some significant gains on the back of the G7 communique, the dollar has failed to hold its firm footing, and we expect the advantage the dollar is enjoying to be short-lived. However, according to the IMM positioning report, speculators added to short dollar positions against most currencies, but added even more to long dollar positions. Today's UK producer price figures were expected to show that price pressures were continuing to increase and should keep the pound firm. With consumer confidence slumping, U.S. retail sales will be critical. However, this figure tends to show considerable distortion, especially given the early Easter. But with deteriorating fundamentals in the U.S., the risks are clearly to the downside. That concludes our news for today. We hope you're finding it beneficial to your trading, and we thank you very much for viewing. Before we sign off, we would like to invite you to visit our website at www.succeedinforex.com. There you will find information about our Traders Trading Center, where our motto is Traders Helping Traders Succeed in Forex. Also, you'll find a link to our Yahoo forum, which is also called Succeed in Forex. We hope you have a wonderful day of trading, and you will be able to join us again tomorrow for our broadcast. And so, happy pipping to you until we meet again.